Ladies and gentlemen, welcome back to the channel. We have a big upcoming week that you need to be ready for. So we're going to go ahead and jump straight into all of this information. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section if you have not done so already. So, why is this week going to be such a big week? Well, you got to look at what happened last week. Last week, we got the summary of economic projections, and we got Fed Jerome Powell on Wednesday. Now, summary of economic projections, in which you can see on the screen here, showed that the Fed expects better GDP at 1% for 2023. They expect a lower unemployment rate at 4.1% compared to 4.5% was their previous estimate in March, and their GDP estimate in March was 0.4%, so borderline recession. They also expect PCE inflation to fall a little bit more, but they expect core PCE inflation to remain way higher than what they expected. So, long story short, they expect to raise rates again twice, the terminal rate going from their March projection of 5.1% to 5.6%, two more rate hikes. They expect inflation to remain higher for longer. They expect the economy to be better in 2023. So this was a pretty bearish summary of economic projections. Markets were not expecting two more rate hikes. They just were, okay? And that's what we got. Now, markets reacted negatively on Wednesday off of this news. And then they started to roar back. And that was right here. This was the summary of economic projections fall. And then you rallied back once Fed Jerome Powell started to speak. And then you absolutely took off on a rampage the next day on Thursday. And then on Friday, you kind of sold off into the close. Friday was quad witching. So you've seen about $4 trillion worth of derivatives expire, and you're going to see repositioning this week with that money. And I think that's a reason why this week is going to be that much more interesting and potentially that much more volatile. So we definitely want to watch that, okay? Watch to see how positionings get moving around after the last quad witching. Now, Fed Jerome Powell, he was dovish when he spoke. A big contrary to what we heard 30 minutes prior to that from the summary of economic projections, which was hawkish. Maybe Fed Jerome Powell did not mean to sound as dovish as he did. Well, if that's the case, Fed Jerome Powell is not going to only have one opportunity to correct that. He's going to have two chances to be hawkish in this upcoming week because he is going to speak at 10 p.m. Eastern Time on Wednesday and again 10 p.m. Eastern Time on Thursday. And these are going to be moments for him to be bearish if he wants to be bearish. If he continues with the same dovish-like attitude as he did on the press conference last Wednesday, markets are probably going to continue to rally from here. If Fed Jerome Powell wants to kill this market rally, that's another choice he has. So it's up to Fed Jerome Powell what he wants to do if he does want to kill this rally. Now, something else that could kill this rally could be FedEx earnings. Now, FedEx is an important company as a bellwether for the economy. If FedEx earnings are bad, okay, then we're going to have a problem. A big problem. Because that's going to show the economy's not doing as well. People are not spending as much money. That's going to look bad for Apple earnings. That's going to look bad for Amazon earnings. That's going to look bad for virtually every company, right? Especially that are reliant on the consumer spending money. So that's going to be a big one in this upcoming week. Now, as far as the economic calendar, we really don't have much. So tomorrow, you're going to get Fed Bullard that speaks at 6:30 a.m. Eastern Time. You're going to get Fed Williams at 11:45 Eastern Standard Time as well in the morning. And building permits for May coming in at 8:30 in the morning. You're expecting 1.42 million. We really don't get reactions off of that, so I don't expect that to be big at all. It's really about Fed Jerome Powell this week because you really don't have any other data points coming out. It's a pretty dry week for economic data. So good thing we have Fed Jerome Powell to spice it up. Now, in regards to AMC stock, we have our major big catalyst at the end of this month. That is going to be June 29th and June 30th. I think this is going to be a sell the rumor, buy the news kind of event. When you think about it, what's the reason why people are short AMC to begin with? Sure, the arbitrage trade has caused a lot more shorts to come into this trade, but why were people short in AMC to begin with? It's because they thought the stock was going to go bankrupt. The company was going to go bankrupt, and they could essentially just ride these shorts down forever if they wanted to, because the company was ultimately going to go bankrupt. Well, if the courts do what we're expecting them to do and allow AMC to raise up to $16 billion worth of capital, the odds of bankruptcy go to essentially zero. And at that point, those shorts probably going to need to cover on those short positions. That's going to be ultimately a losing trade, right? So I think that's going to be important to consider, right? Over the next couple of weeks, you might start to see more people getting bullish on AMC. As we seen on Friday, you actually had the highest positive order value that you have seen in months. And Friday's positive order value was 21% positive. You've seen 21 orders totaling $18.63 million. You've seen an August 18th $2 call, a January 17th, 2025 $1 call. You've seen multiple July 21st $5 calls. And you've seen a big order for January 19th, 2024, a $6 call worth over $2 million. So sure, there was a lot of bearish option activity as well, but you finally are starting to see glimpses of some bullish positioning in AMC as well, which is very, very different than what we've seen over the last couple of months here. Okay, so you are starting to get a little bit of bullish positioning in AMC, and I think it's no surprise as we head into the later parts of this month, as we get closer to June 29th and June 30th, that ramp up of bullish option activity is likely to continue. Now, if we take a look at the short positioning in AMC stock currently, you have a short score of 94, 573.51 million worth of short positions in AMC, estimated short interest of free float at 23.63%, 37.77% short interest of free float, 195 million shares that are currently out on loan. Days to cover sitting at 8.62. 3-month cost to borrow fees at 105%. And 100% share utilization. Now, shares or days to cover at 8.62. That is really why the short score is continuing to increase. The days to cover is up 57% in the last 3 months. 3 months ago, this was at 5.5. 8.62 is the highest days to cover that you have seen in a very, very long time with AMC. Like years now, like before the stock ever squeezed in the first place, you have not been at 8.5 days to cover. What this means is the short position is very high and the volume has been dropping. So that means when volume essentially comes into the stock, you're probably going to rally even more aggressively at that point. It's going to take a longer amount of time for short sellers to actually cover on all of those short positions. And that is very exciting, even in terms of what's going to happen by the end of this month. If this does turn out to be a positive catalyst for AMC, well, what does that mean? The stock likely is going to be even harder to cover on. It's going to drive this share price up even higher. Now, cost to borrow fees are also a big story here. Cost to borrow average, all of them have increased quite a bit over the last week or two. Cost to borrow average at 219%. Cost to borrow max 287%. Cost to borrow minimum at 144%. If you take a look at Interactive Brokers, you got a 97% cost to borrow fee with 200 shares that are currently available to be lent out. Now, if we take a look at AMC and the charts, You really haven't done anything since this rally that we've seen up to almost $9 per share back here in February of 2023. You have been trading sideways since March. I mean, 3 months now, just sideways trading action. You're not at the lows, but you're not even close to the highs that you've seen over $6 per share during this last 3 months. So this week, I really don't expect a lot. I don't have a big price target on AMC. As high as $6 per share, is that possible? Sure. What I expect, in between $5.25 per share and in between this low wick that you've seen back here on April 6th of $4.30 per share. I really don't expect a big move until after June 29th, in which I'm starting to feel that that is going to be a bullish reaction, that you're actually going to rally off of the court situation, right? Even if it should be negative for AMC's share price, I think in theory, right, with the conversion actually happening, I think you've already seen a lot of bad news be priced into AMC stock. I think a lot of people are already expecting this to ultimately happen, and the share price being where it is very reflective of that, right? So I think you get that adverse reaction, that adverse move to the upside after the end of this month. But from now until then, I really don't expect too much to happen. I think we could head into June 29th roughly the same price as where we are now. I don't expect a big collapse. I don't expect a big rally into June 29th, although I would lean more towards a rally into June 29th, again, as you can try to play that adverse trade where you could be the small percentage that expects a rally when the vast majority of people and investors expect the stock to fall after June 29th. Maybe that psychology does feed into a bullish move with AMC, but I wouldn't count on it. Now, the RSI currently sitting at 43.25, under that neutral level of 50, not quite oversold, but you're definitely on the negative side. The MACD, which is pretty interesting, is slightly positive on a shorter term momentum basis. So that makes me a little bit more encouraged. But again, I don't expect all too much to actually happen until the end of this month, guys. So that is going to do it here in this video. There's nothing really to report on as far as other news is concerned. There is more broad news like Goldman Sachs downgrading China's growth forecast, as well as UBS, Bank of America, JP Morgan, Nomura, and Standard Chartered Bank as well, all lowering their estimates for China's growth. This is leading to the pre-market oil being down about 0.5%, and the index is down about 0.2%, pretty much across the board. Bond yields up by just a little bit as well. So not a lot. Pretty dry week. Fed Jerome Powell is going to be by far the biggest event for this market, and could really drive the markets up or down in a big way. So that's also something that I would be on the lookout for, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.